Hey everybody and welcome back to another video. This one is going to be on General Motors. So normally I get into some of the numbers and the financials, but for this one I wanted to get in right into a story that has been going around the news recently, and that is the Chevy Bolts have been catching fire. There's a malfunction with the battery, and if you leave them charging for too long in your house, or even just leave them charging for too long like you would overnight, they could catch fire. And these fires have been really hard to put out since they're chemical and electrical fires, so you have to use kind of two methods to try and put them out, and they've taken firefighters almost hours to put these out. These are some of the horrifying pictures that the news has. There have been videos too as well. This is in someone's garage here. These are several other ones on the street. This is some firefighters trying to put it out. But I just wanted to point out that that is a great buying opportunity for GM, considering in the past couple days it has gone down considerably. Sorry about that. From hitting about almost 60 bucks just on the 13th, and today on the 15th is 56, so dropping about 4 points. And it's really just kind of unwarranted, and I'll show you why. So if we get into the total Bolt sales, we have it here. This is Bolt sales in Brazil, less than 1,000. Bolt sales in Canada, looks like less than about 20,000, maybe even less than 15,000. Bolt sales in Mexico, looks like even less than maybe 150. South Korea, less than, 10,000. And America, which is by far the most, is less than maybe 150,000. So I'll say, to be generous, I'll give them 150,000 total sales for the Bolt EV. And if we times that by their margin on how much they're making on their cars, if we go here into the statistics and we check the profitability, we can check profit margin, and operating margin is about 7.5%, and for operating margin is almost 9%. But these are mostly on ICE vehicles, which are less profitable because there are more moving parts going into them. So I'll be generous and give them a 15% profitability for this car. And if we look up how much they're worth, they're about 30,000, 35 if you want to really pimp it out, pimp your ride out. So the total sales of this whole car for the GM line is less than $750 million. And if we look at their market cap, which is what we normally start the video with, that's less than $1 billion, and that's almost less than 1%. I would assume it is almost less than 1% of their market cap. So not to say that this doesn't matter, because it is, and is affecting people's lives, and people can get hurt from this, and it can be actually quite dangerous and can cause people to have a negative stigma around the company. But if we're looking at financials and the company itself and the business model, it's not really going to affect it at all. If we look here, I think this is the first stock that I have analyzed that has been undervalued by Yahoo Finance's analysis. And if we look here at the PE ratio, that will definitely indicate that it is undervalued for the growth that is about to occur for this company. They are at a 9 PE currently. If we look at the statistics, we can get a closer look on the trailing and the forward. So the trailing P is a 9.5, and the forward P is 11. So what this means is the price to earnings is based really low for this company, and they're not pricing in a lot of growth. Comparatively to the rest of the S&P 500 currently, the average PE ratio for forward is anywhere from 20 to 25, maybe even 30. They have been on the quite higher end recently. If we look here at their price to sales, anytime you get a price to sales under 2 is very undervalued, and this is under 1, which is meant to be considered extremely undervalued. Their price to book anything around, I would say a 3 for vastly growing companies is very excellent. And just most all of their financials point to this company being undervalued. The one thing currently that is not very bullish is their profit margin. But again, this is a car company currently, and profit margins for cars aren't known to be the highest. But since they sell so many cars and the price tag is so high on these items, they are able to get away with it. So if you sell 1 million vehicles and you have $1,000 profit, then you get over $1 billion. So it adds up very, very quickly. So the revenue for the quarter was almost 125 billion, and the year-over-year quarterly revenue growth was actually negative. So if we look at when the quarter was taken, this was from December 31st, 2020 to March 31st, 2021. So it was the first quarter, and that was year over year from 2019 to 2020, which was a very, very good year, which was pre-pandemic levels, and which was a very booming economy, especially for cars. And honestly, it's not really a worrying number because this is all based off of their ICE vehicles, which are all gasoline, and a lot of the growth coming from this company is going to be EVs looking forward. They have, I think, over 10 EVs that they're planning to announce over the next 2 years. I know they own a lot of brands, so they're coming out with a Cadillac EV, a Hummer EV, they have a GMC truck, and just, I'm sure, more Chevy EVs after the Bolt fiasco. But they just have so many cars in the pipeline that they're just destined to get some of the market share on the EV space that is looks like a guarantee to exponentially grow over the next coming decades. Another interesting tidbit I wanted to point out, the held by institutions is extremely high. This is very similar to Penn National Gaming. Almost all of this company is held by big money, which is very, very bullish because big money is, when it comes down to it, what moves a stock. It's pretty hard for individual investors to collaborate together and really move a stock. We have been able to see it in AMC and GameStop recently, but that required a lot of planning and a lot of really just holding on for dear life, as people like to say, hodling. So the short interest is very, very low, which is honestly a good thing. I know that could be considered a bad thing by many retail investors recently, but you don't want a stock that's shorted a lot. It can cause it to move up quickly over a short period of time, but you don't really want people thinking that this company is going to go lower over time. I think that's a very bearish point on a company in most cases. But that was kind of my bullish thesis on GM. I really just think that this whole Bolt situation is getting overblown and that this company is very, very undervalued considering that this is an EV player and they're going to be coming out with dozens of cars over the next decade, and they're going to have over millions of sales on their vehicles. And all of their multiples on their stock are very, very low. If we go back to the statistics, I see the P ratio could easily triple, and there would be no problem with it because most EV players in the space have even a quadruple, maybe even a 10 times price to earnings ratio as them. If we look up Tesla, their PEG ratio is also 4 times higher. So if we look at Tesla comparatively, they also do have slightly more growth, but that is really could be argued considering the amount of sheer vehicles that GM can release. But if we look here, the price to earnings on a forward P is 166. That's over 12 times the amount. So theoretically, if you're pricing this similarly to Tesla, the stock could 12x. But obviously, they don't have as much growth priced in, and that is why it's lower. So I think a better ratio to look at is the PEG. which is a 4. And if we look back at GM, we go backwards to, it was about a 1.6. So this stock could theoretically, in my opinion, about triple, maybe quadruple over the next 2 to 5 years. And that would be pretty reasonable in my opinion, and I wouldn't have any problems with that. So if you were looking to buy an EV player, definitely think about GM. If you made it this far, thank you very much for watching, and have a great day.